Welcome to the Women's Business Center at Cornerstone Alliance's Business Plan Certified, proudly sponsored by Stearns Bank. During this series, you'll gain tools to help you launch or grow your small business. Now, let's begin.
Good morning. I'm Tammy Gallant. I'm with Miller Johnson Schroeder. I am a paralegal to attorney Mark Miller. Mark and I specialize in real estate, setting up LLCs, corporations, buying businesses. Okay, so we're going to go over to some of the kinds of business structures you can set up and the pros and cons of each one. I may go fast because, like I said, we only have 15 minutes and there's a lot. So let's go to the first one. So we're going to look at, oh my goodness, I can hardly see that. We're going to look at the forms of business. You have sole proprietorship, partnership, limited liability companies, and corporations. Each form of company has their disadvantages and their advantages. Okay. So the sole proprietorship, they're easy to establish. All profits are retained by the owner. The owner controls the decision making, and there's very low startup cost. There are some tax advantages and easy to terminate the business. However, sole proprietorship, which means unlimited liability, that means that you have no protection if somebody is going to try and sue you. They can sue you personally and all of your personal assets. Okay, it's difficult to get people to invest in a sole proprietorship. Inexperience, if you have a single owner that's starting a business and they don't know how to proceed with their business, they're very inexperienced. So you don't have the advantages of having other people on your team that can help you start your business and get you going, okay? And if the sole proprietor passes away, it's very hard to sell the company or wind down the company. You have to make sure you have an estate plan and all that good stuff. We normally don't recommend people do sole proprietorship because there is a lot of risk involved, okay? General partnership, same thing, easy to establish. There's a larger pool of people that'll be involved that'll help you with your business, more sources of capital, more people will be more apt to loan you money for a partnership. The partners control the decision making. And with that now, when we set up a partnership, which we don't do often either, one person has to have 1% over the other. Okay, so there has to be a deal breaker. So in case there's, everybody agrees on the same thing. And there are some tax advantages. Now, there is unlimited liability, just like a sole proprietorship. So every partner that's in with the business, they all can be sued personally for any liability of their assets, personal assets. Partnership terminates when incapacity. So if one of your partners passes away, then the partnership is gone. You have to set up a whole new LLC or, partnership. We don't do partnerships very often either. Difficult to raise capital sometimes. Divided authority, we talked about that. Somebody has to have 1% more in the decision making. And it's difficult finding suitable partners for a general partnership. Limited liability company is the main one we set up for people, okay, depending on your business. There are tax advantages. It's low startup cost, greater flexibility with management, and less formal than a corporation. The filing procedures vary from state to state. With the state of Michigan, if you set up an LLC, you have to file every year to stay active with the state of Michigan. The limited liability companies it's the newest form of business, but getting more popular instead of corporations. The corporations have a longer history of liability limitation, which means if you're a corporation, the people that are on the board of the corporation are not liable for any lawsuits. Same thing with LLC. In your operating agreement, we actually put in there that members of the LLC are not personally responsible for any lawsuits that come in. So with that being said, they can always break the corporate shield and try and sue you, but it's less likely that you will get sued personally and lose any of your assets. You are forced to pay taxes every time you pay yourself. So with LLCs, you can do withdrawals. They're member draws is what they're called. And you can get in trouble if you don't pay taxes every time you take those draws, okay? If you don't pay taxes every time you get those draws, and at the end of the year, you may owe $20,000 in taxes, okay? So that's one thing that can get you in trouble with LLCs, which is why you should have a good accountant to help you, all right? Corporations, stronger liability protection. Nobody on the board is responsible for any lawsuits that come in. They cannot be sued personally. Easier to raise capital. More people would invest in corporations than they would do the other companies. Ownership is transferable. With LLCs and with corporations, you get what they call certificates if you own them. And each member gets certain shares. Whatever you buy into that company, you'll get shares. And you could take those shares and transfer them to somebody else if you want to sell them, okay? Large pool of expertise with corporations. You usually have a big board, and you have a lot more people with knowledge that can help you with your business. S corps are taxed to the individual. So S corps, and correct me if I'm wrong because I always get this one messed up. S corps, a corporation can be taxed twice. Once on the income, and then once on the income to the owners. But if you do an S corp, it's only taxed on the owners. I got it right. I always get that one messed up. Corporations, the only disadvantages is that they're closely regulated. So there are a lot of federal laws that you have to follow when you have a corporation. Extensive record keeping, which with corporations, we suggest they always hire an accountant to do because there is extensive things you have to file with the government and record keeping, okay? Very expensive to organize, and possible double taxation, which is what we just discussed. All right, tax identification numbers. If you are an LLC, we always recommend that you get an EIN number, okay? And you have to get one if you have employees. And depending on what you are going to do with your business, if you have employees, you have to get an unemployment number. And you have to get a state number to pay taxes, the state taxes. And then if you're selling something, you have to look to see if you have to get sales tax, okay? Now, depending on what you do, for example, like I said, we do a lot of real estate, so I help people buy Airbnbs a lot. But they don't have to get a sales tax number because they use like Airbnb and those platforms, and they take care of the sales taxes. But if you are actually selling a product from your company, you have to pay sales tax on it.
That doesn't mean you're not paying sales tax. Airbnb is just processing the sales tax.
Correct.
So,
Correct. And she knows, yeah. So when you're considering, if you're considering purchasing real estate for your business, you want to make sure there's types of agreements, there's leases, there's purchases, property taxes. Where you look to see the location you plan on buying your real estate to make sure it's going to be a location for your specific kind of business. So look and see if you think your business is going to end up expanding, make sure you find a place that you're going to be able to expand to, make it bigger. And you have to home-based businesses. Make sure you check with your local authorities to make sure there won't be any zoning issues, because sometimes home businesses can't be done without permission for zoning. And you can apply for special zoning permissions. Factors to consider when you are leasing, look at the term of the lease. Decide if you think you may not want. So if you sign a 5-year lease with somebody, are you sure you're going to want to stay there for 5 years? So you want to make it to where you think you can. If you need to break it, you can break it. We always suggest a year lease, okay? Because if you decide after a year you need to go to a bigger place, then you have that option, okay?
Can I ask a quick question?
Sure.
I'm sorry. What about commercial property? Because I need to buy a commercial lot for private semi-truck parking.
Okay.
So are there any special rules?
No, commercial is the same thing as just buying real estate. Yeah,
Okay.
there's no difference when it comes to buying.
Okay.
You just want to make sure what you're using that property for is allowed in that area.
Okay, gotcha.
Okay.
Okay.
For zoning.
Mhm.
And like I said, you can always apply for special zoning permits.
Okay.
Contracts and legal documents. If you are providing a service to somebody, please have a very extensive contract and make sure it's going to protect you. Now, with that being said, you should have an attorney look at it, because if it's too biased and you have to go to court over something, the judge will frown upon that, okay? But you need to have a good binding contract signed by, there's so many people that, and I know for us older people, handshakes were always good enough. Well, they're not good enough anymore. You have to do contracts. Employee contracts. If you decide to hire employees, do employment contracts. They, at one point in time, they stopped a program where you couldn't operate a business within so many miles of a business that you quit working from. Since then, they have stopped that. So non-disclosure agreement and stuff.
Non-competes.
Non-competes, yeah. So, but you can do those now. But you want to make sure you have an employee contract, make sure you have an employee handbook, make sure they sign something saying they understand the rules that you have in the employee handbook. Purchase orders and invoices, make sure that you are securing terms that you know that you can afford and do, okay? Make sure you read contracts that if you're signing for a service that you're going to be receiving every month.
In regards to employee contracts, if you have 1099 people working for you that have to take care of their own taxes, do you still have to treat them as their employees, or do they go to something different?
No, with 1099 employees, and this is where people get in a little bit of trouble, okay? States are starting to look at companies that hire 1099 employees. If you have a 1099 employee and they are with you for a few years, the state can come back and say, they are an employee, and you can be responsible for paying back taxes. I just had a lawsuit last year in Indiana where the gentleman kept 1099 employees for about 20 years, and the court ruled that they were considered employees, and he had to go pay several hundreds of thousands of dollars in taxes. Now, with that being said, if you have a 1099 employee, the way to protect yourself and them not saying they are employees is that you need to get a certificate of liability insurance from them every time you do a job. And then you have to get a bid from them every time you do a job. That protects you from the 1099 and the state considering them employees. So you want to keep those on record. Okay, and it's their responsibility to do everything else. So as long as you have those two things, you're protected.
So if you get invoices from them, would that be qualified as a bid?
Yeah. They have to give you an invoice. You know, if you're going to pay them, they need to give you an invoice for their time spent. So make sure you get records from them. Okay. And then when you are working with clients, if you're signing a contract with somebody to provide them a service, say on a monthly basis, make sure they understand your terms and your operations. Okay. And with that, I'm done. Woohoo! Woo! I did good. Yes, ma'am.
Any questions really quick before 2 minutes?
Yes.
Question.
I've been operating as a sole proprietor, and I have an EIN and I have a DBA, and now I'm wanting to form an LLC, and I'm like stuck on that level.
Mm-hmm.
And everything I've read says I have to like dissolve my sole proprietor. So
Are you registered with the state?
Yeah.
Okay,
And
so
I like pay taxes with that EIN.
Yep.
So
yeah, you have
is
to.
it gonna like mess up my LLC application to apply with the same business name since I already have that business name?
No, you'd have to dissolve that name first. Okay.
Okay.
Which doesn't take long. If you do it, because you have an expedited service with the on LARA, on the corporations. If you do an expedited service, you'll get it back in the same day, and then you can turn around and set up your LLC with the same name.
Okay.
But it has to be dissolved first.
That's how easy it is to dissolve a company?
Well, it depends. With the sole proprietorship, yes. With the LLC and a corporation, it's not that easy. Now, I will say with an LLC, for example, a lot of real estate that we sell that people are buying Airbnbs, it's usually a husband and wife So that's not extensive. We can just dissolve it and be the end of it. But if you're an LLC and you're doing a lot of business through that LLC, there are several steps. You have to put an ad in the paper to let your creditors know that you are closing down. They have a year to contact you to collect any money. So it's a little bit more of a process when you're doing major business with your LLC or corporations. And corporations is even harder to dissolve. There's a lot more steps you have to take.
Okay, so I got something similar. I'm sole proprietor, and then I started an LLC like the same year, and it does have the same name. The only difference is my LLC has LLC on the end of it.
Yeah, it depends on the state. Sometimes, it just depends on the state. Sometimes they'll approve things, but sometimes they won't, So
Guess I'm asking, do I have to dissolve it? I mean, like I'm an artist. I do like portraits and drawings, so that's what my sole proprietorship is. Just me doing
right.
drawings, but then the LLC is like me doing candles and more art.
Well, like I said, we don't recommend sole proprietorships just because you're wide open for liability. If I were you, I would change. If you're going to do two different things under two different LLCs companies, change the one to an LLC so that you're somewhat protected, even though you may have to name it different or something.
So that's what I should do, because I do have an LLC and a sole proprietorship.
Yeah, you either move everything over to the one LLC or set up another LLC because you're wide open with sole proprietorships.
Thank you, Tammy.
No problem.
I'm Jennifer Summers. I'm with Insurance Management Service. I have been there for 34 years as a commercial agent, and I primarily focus on commercial lines agent insurance. So with that being said, we'll get started. The introduction to business insurance, importance of insurance, protecting your assets, employees, and customers. Key types of insurance, workers' compensation. It's requirements for businesses with employees. So I want to touch on what Tammy said. Employees in the state of Michigan and under the work comp on the Michigan law, there is a difference between 1099 and W-2 employees, which I think Mandy will work on as well. So the state with workers' comp, when they do an audit, and I'll touch base on that shortly, workers' comp is based off of payroll. That's a W-2 employee. You have to have a certificate of insurance for a 1099 subcontractor. So a subcontractor, if you dictate where that subcontractor is, what time they have to show up, what they have to do, that is an employee. That is not a subcontractor. So on a Michigan State audit form, we will have you for a sole proprietorship for a 1099 subcontractor. They have to fill out an independent contractor form describing who else they work for and what other jobs they do and sign it. And that has to go hand in hand with the audit and the certificate of liability. We're skimming the surface here. I'm always available for questions. There's so much for insurance. But workers' comp is required by the state of Michigan if you have 3 or more employees that work 30 hours or more a week for 30 weeks or more a year. So a lot of these seasonal farms and whatever, sometimes they can get by with a couple of employees and not. But you're still required to pay for their injuries if they're injured, whether you have workers' comp or not. So err on the side of getting workers' comp. General liability. That is liability for protection from third-party claims. You own a piece of property, somebody slips and falls, we're going to cover the injuries from that general liability. Somebody sues you, say you have an online business and you slander someone, or you do a copyright infringement, or you've got liability for that. Premises and operations, property, medical, it's all uncovered under general liability. And it's I'm doing a very broad here. There are so many exclusions to policies that you have to pay attention to those. We'll get into that later. Commercial property insurance, coverage for physical assets, things you can touch. Your business building, your business personal property, and those are 2 things that can really get you in trouble if you don't insure them correctly. And that's what an agent is here to help you walk through and what you need. Kind of the same thing that was on page 1. So workers' compensation, legal requirements, again, 3 or more employees, 30 hours or more a week, 30, and you have to have it. You'll get fined hefty if you don't. General liability, protection from claims of injury and property damage. Commercial property insurance covering equipment, inventory, and facilities. There's another piece of these as well. Inland marine it sounds like a boat. It's not. That is mobile equipment or tools. So if you have excavators or bobcats for contractors and such, mobile equipment has to be insured on a separate line item of coverage. The general liability and the commercial property, we can usually package together. So we'll put a package for you that includes that and the tools and the inland marine. And whatever crime that's not listed on here. Business auto is one that I've accidentally left off, so I apologize. Business autos, you got to be really careful. If you're using your personal auto for a business driving around, if you have your name on your car or your business name on your car, most personal auto policies will not cover that. So make sure that you are going to check with your personal auto insurer if you're driving your personal auto around so that you have coverage extended. Time of loss is not the time to find out. And honestly, commercial auto, the auto's an auto. You can repair an auto, you can replace it. If you accidentally kill somebody or injure somebody, that liability could really ruin you for life.
What's the dividing line on that? I mean, like, if I'm driving to a location to do an event pop-up, like what's the difference to me driving to that store and me driving there for my event?
An attorney.
But I think you're saying the difference is if you put your business name like on a
Well, I have a
magnet
little
on
sticker
your
on
car,
the car,
then
actually,
you're
but-
now,
That's a commercial auto all day long,
Yep.
all
That's
day.
That's the,
Take it off.
And same thing with commercial property insurance. If you are operating your business on your home residential premises and say, for example, you're running it out of a separate building on your premises, check with your per homeowner policy. 9 times out of
Okay, so
10,
My business is all service. And
Okay.
people will not be at my house.
but some people are at their home. So make sure you check with your homeowner property coverage that building is covered and the contents inside that building are covered. It's typically an exclusion on your personal homeowner's policy. And most people don't know that until time of loss and liability. If you have a home premises business, make sure you follow up with your home property coverage for property and liability that is covered on your residential premises.
and just to reinforce, working with your insurance agent is free. Like
Correct.
getting this quote, getting this
Correct.
feedback, understanding what you need. This is not an operational cost for you. That is, they're going to try to want you to be a client, and that's where they make their money. But that is you're not getting a charge for getting a consult. From
Not
an
at all.
insurance broker.
I encourage you. There's no bad question. There's no dumb question. None. I'd rather you not try to figure it out on your own. And everybody I'm sorry, you have friends who own a business and they'll give you their expert advice, which is 9 times out of 10 wrong. And, like the police officer telling you, oh no, that 5-point ticket's not going to count on your insurance. Yes, it does. So go to a agent. Don't try to cheap out and do it online. Because that online it's a bot, it's a computer, it's AI. It doesn't know you, and it doesn't know the questions to ask.
You guys,
Yes, ma'am.
she's got, I'm sorry, she's only got 7 minutes. left.
I will give you all my business card. There's so much to insurance. So
Sorry.
key questions to ask: what specific coverage does my business type require? Are there industry specific programs available? Yes, that is yes. How can coverage be adjusted as my business grows? A lot of people forget to tell me when I'm working with new startups, I'm like, hey, I'm going to check in with you every quarter because I want to see where your payrolls are. I want to see where your sales amounts are. I want to see what your employee number is. Have you purchased any new property? You may be growing and forget to tell me. It might be covered depending on what kind of policy you have. For the first 90 days, you may have a little bit of coverage that will extend, but the 91st day, it's done. So we want to make sure the first year that we hold each other's hands to make sure that, you're growing. Insurance budget planning, balancing coverage needs with financial constraints. Again, these three right here are imperative. The attorney goes hand in hand with the accountant, with your insurance agent. Don't be overzealous starting your insurance policy and your business plan. Be conservative because that's what I'm going to rate you on. It's either based off of sales for general liability, it's either based off sales or payroll, depending on what your business is. If you're, for example, storage units, that's based off of square foot and area. So you can't fudge that. Sales and payrolls, some people are like, I'm going to make, $300,000 my first year and I'm going to have, $100,000 in payroll. Let's revisit this because your premiums are going to be really expensive right out of the gate. I don't want that for you. I don't want to be the one that has to call you every month because, okay, I overinflated my numbers and I cannot afford these premiums. I am not going to lie. Insurance is through the roof right now. Anything we can do to help you, to save you money, I'm there for you. Common insurance pitfalls. Watch out for business owners. Underinsuring critical business assets or operations. Overlooking cyber liability and data breach coverage. I'll touch base on these in a minute. Failing to update policies as the business evolves. I already touched on that. Not understanding policy exclusions and limitations. Number one, underinsuring critical business assets or operations. That's major. I can't tell you how many people, and you can do it in certain areas, purchase a building or a location for market value. Let's say it's probably a replacement cost of say $500,000, but you can purchase it for $100,000. We have different ways we can insure properties. We can insure actual cash value, which is market value, replacement costs, or settled agreement. If you don't insure it for replacement costs and you want it for actual cash value, that's all you're getting. So if your building, half of it burns down, chances are you're not going to get to fix that building. You're going to have to tear the other half down, and whatever's left is what you have left to operate and restart your business. It's not a good way to go. Some people don't care. And it's up to you. I'm not going to talk you in or out of whatever it is you want. I'll make you sign what you chose because I don't want to wind up with her. And again, this is all swimming on the very, very surface. I would be happy to sit and talk with anybody about your certain specific business needs. Overlooking cyber liability and data breach coverage. That's the number one fastest growing claim in the United States right now because we've got bots, we've got AIs, we've got everybody in here has a cell phone. I guarantee you all get potential spam calls every single day. People fall for this every single day. Every single day, they're trying to hack into computers to get your bank accounts, to hold your data hostage. If you're taking credit card information, 9 times out of 10, you're going to work with a third-party company that is responsible for that. But again, you got to read the contracts. Read the contracts, and I'll touch base on that and other things as well. The contracts for the third-party credit card company may tell you in their little blurbs whether you're responsible for a data breach or they're responsible for a data breach. That is detrimental. The state of Michigan, and either one of you please chime in, the law requires them to run a credit check on every person, to do that for 3 years? It's a long time.
I think it's.
And you have to do it as often as they want it. And it's not cheap. So we'll give you a Band-Aid of coverage, $25,000. That's a spit in the bucket. That is nothing. A true cyber liability policy, as you grow, not telling you need it right out of the gate, I don't know, about $1,000 a year for $1 million coverage. And it covers a plethora of information, items. So again, failing to update the business policies as it evolves. If we stay in touch every 3 months or with your commercial agent, ask them, hey, can you put me on your, we have what's called a suspension system. Every 3 months, it's going to pop up, call ABC, and I'll call you or email or text you, whatever your preference is. Not understanding policy exclusions and limitations. You will not be surprised the amount of goofy things that are excluded on policies. And I'm just going to give you some examples. Property, you have to buy back overhead power lines. It's not included. So if you have a restaurant or anything serving food or flower shop, things you need to keep cold, you have to make sure equipment breakdowns usually excluded, overhead power lines excluded. Your agent has to know what they're doing so you can buy these things back for you. If you don't have the coverage. When I started out as a brand new agent, nobody told me that. And I had an ice cream guy that he lost all his ice cream. And a car hit a telephone pole, the power went out, all his ice cream melted, and I felt this big. I felt horrible. Never forgot that lesson. Another one that we didn't touch on was loss of business income real quick. How much time do I have left?
You have 30 seconds.
Okay. Loss of business income. It's another thing that's not covered on the policy. We can add it for you. It's if you lose your sales income because of a major loss at your property. That's a covered cause of loss. Again, we are swimming on the surface here. I am always happy to, even before you start your businesses, reach out and email me. I have my business cards available. It's a lot, but I'm happy to help anybody, or reach out to your commercial agent. They will be happy to help you as well. I guarantee it. You're welcome.
Thank you.
All right, I have goodies up here for you all to grab before you leave today. All right. I am Mandy Wallace. I'm with UHY Advisors. We are a CPA firm with local locations in Kalamazoo and Dowagiac. I work in the Dowagiac office, and primarily what I do is help businesses in their day-to-day operations. So we assist with bookkeeping, with payroll, with general, how do I run my business type of questions. Our office in Kalamazoo does the income tax side of things. So I just like to be clear that I am not a CPA. I do not do income taxes, but I used to do income taxes several years ago at our firm. So I am typically able to kind of guide you in the right direction, especially with those startup questions. And I also own 2 businesses of my own. So that plays into how I'm able to consult with clients as well. So we are going to talk about a few different pieces of the accounting side of the business. Who's really excited for accounting and bookkeeping part of their business, right? That's why you went into business, right? If I've said this once, I'm sure I've said it 100 times in the last decade, that when you start a business, you usually start the business because you're really good at your skill or your trade. And you go into business to do that thing, not to sit at a desk and do your bookkeeping and consult with your insurance person and do all that behind the scenes type of stuff. That is why you need a good team. So both of these ladies have said it already. I want to echo it again, that when you start a business, having the right players on your team is crucial. And selecting those people, a good banker as well is always a recommendation I have, is just very, very helpful to get you started, because as a small business owner, you are going to wear a lot of hats, but you truly cannot wear them all. So you have to know a lot of different facets of your business, but you don't need to be an expert in every single thing. You need your experts on your team. The different types of businesses, Tammy talked about some of those a little bit. The accounting side of that is part of that decision as well. So usually when you're starting your business, you want to be having a conversation with your accountant and with your legal counsel about what is the right type of business for me, my situation. Part of that is dependent on the industry that you're in, but part of it is dependent on very personal factors as well. Is this a husband and wife team? Are you doing this solo? Do you have a non-related business partner involved? All of those are part of that equation. Hiring employees, sales tax. I think we have a slide for each one of these. Am I remembering correctly? Okay. The pros and cons of the business structure. So we touched on these for a little bit. Sole proprietor is not often recommended. The only time that I have really seen that recently still be a preference for some people is if you are running some type of a very small cottage business. You know, you're going to the farmer's market and selling your product or your vegetables, and it's just a piece of what you do. It's maybe not even your full-time gig. Sometimes folks still are wanting to set up sole proprietorships for that. I can help with that process, of course. That is something that is still done, but it is almost just as easy to set up a single member LLC as it is to set up a sole proprietorship, and the LLC gives you that liability protection. Accounting wise, tax wise, a sole proprietor and a single member LLC are identical. They are taxed the same income tax wise. You register the same way with sales tax and payroll tax and that kind of thing, but the LLC gives you liability protection. Partnerships, I completely agree with what Tammy said there. We do not see a whole lot of those anymore. They can be messy, just to be direct about it. They can be kind of messy. They are not as tax advantageous as an S Corp would be. So primarily when I'm consulting with business startups, we find them either forming a single member LLC or an S corporation, or an LLC taxed as an S corporation. They are much easier to set up and to work with day-to-day wise and to file and pay income taxes with. So I would recommend that if you are at all unsure what kind of entity you need, it is worth the consultation with an accountant and an attorney to make sure you're just setting it up right from the beginning.
Mandy, can I
Yes.
just reiterate on this? With an LLC in the state of Michigan or a corporation, you can opt out of covering yourself under workers' comp. So proprietors cannot carry workers' comp on themselves. LLCs you can, corporations you can, or you can opt out. Sorry.
Thank you. Hiring employees. We talked about this a little bit previously because this is a really hot topic. This is a big deal for small business owners. When you hire someone and you say that you're going to pay them $15 an hour, it costs you a lot more than $15 an hour. And so I get the question all the time of, well, can I just pay them as a 1099 employee? Maybe make a note for yourselves is if this is anything that's on your radar at all, terminology. An employee is someone who is on payroll. They get a paycheck. They have payroll taxes withheld. They're going to get a W-2. You're going to carry insurance on them. That is an employee. Most all of us have probably been an employee at some point in time. An independent contractor is a 1099 employee. As far as the government is concerned, an independent contractor is not an employee. That's the wrong word to use. So if you're trying to ask questions, you're trying to figure it out, use the terms employee or independent contractor. That will help you get good advice right off the bat. W-2 employees, like I just said, if you hire someone as an employee, you're going to be paying all of these things on them. Federal and state income tax, you are withholding from their paychecks and then you're paying it in. So it doesn't directly cost you anything, but you still have to do the work. You still have to hold on to that money and do the filings and pay it into the government. Social Security and Medicare is a match. It is withheld and you pay the matching component. So that does cost you directly. And unemployment paid at the federal and state level, there's no withholding piece to that. That's just on you. You have to pay that in. So you can see that this gets expensive, but a lot of times they really are employees. And so it's the right thing, it's the legal thing, it's the proper thing to do is to set them up as employees. There's a note here about ESTA guidelines. You may have heard some of this recently. The state of Michigan passed a new law about earned sick time. This is the Earned Sick Time Act guidelines is what this says. And that is basically putting a policy into place that says employees are entitled to paid sick time based on the number of hours that they work. It's just one more component that your payroll person or payroll service needs to understand and have that put into place properly for you. Really, this just goes back to my prior point of you need to have the right people on your team. You can't do it all yourself. You cannot be an ESTA expert when you have all the other aspects of your business to run. Minimum wage updates. This is something that happens every couple of years, sometimes every year. It's one more thing that whoever's processing your payroll needs to be well versed in and stay on top of, because if you are hiring minimum wage employees, there's a lot to it. There are different minimum wage rules based on their age, and if you're not paying somebody minimum wage because it went up and you didn't know, then now you're the one who's in hot water. 1099 contractors. The W-9 form goes hand in hand with the certificate of insurance that was mentioned before. If somebody is working as an independent contractor for you, you are paying them as a subcontractor to do certain parts of your business for you. They need to provide you with a W-9 form. You can just Google it. It's an IRS form that they fill out, they give to you. You don't send it anywhere, but you have to maintain that. You need that information from them. Their certificate of insurance is something they would provide to you as well. And this note right here about the independent contractor requirements, that is the terminology for when you're doing your research of, is this person really an employee or an independent contractor? This used to be called the IRS 20-point test, 19-point test or something. They don't use that terminology anymore. But it's basically a set of questions that says, does this person come to work when you tell them to come to work, or do they just show up when they have the ability to do so? Okay, so if I'm a contractor and I'm hiring a plumber to come do the plumbing on this job, he's going to show up when he's ready to show up because he's fitting it into his schedule. And he's going to bring his own tools, and he has his own insurance, and he does his own marketing because he has his own established business. He is an independent contractor, and at the end of the year, I'm going to send him a 1099 form that he is going to take, and he's going to file his own tax return. But if that same person in question is coming to work when I tell him to come to work, and he's using my tools, and he's doing what I tell him to do, how I tell him to do it, when I tell him to do it, then he's not an independent contractor. He is an employee.
Is that included with just one-time situations as well?
Really, the rules are the rules as far as, the government is concerned. There are a lot of businesses who could make the case that this was a one-time thing, and that's frequently called contract labor when it's just kind of a one-off. Sales and income tax. Sales tax applies to selling of products or renting of something. So if you have an Airbnb that you're renting, that still falls under Michigan sales tax law. It's actually called use tax. If you are providing a service, then you're not subject to sales tax. That is the swimming on the surface level. The Michigan sales tax law book is about this thick, and there are a lot of exceptions and one-off things in there. If your business is in any what of a gray area, it's worth it to consult with an accountant about your sales tax situation and just make sure that you don't have any surprises. Food's a great example. I won't go deep into it, but there's a difference between the food you buy in the grocery store and the food you go buy that's served with a napkin and a fork that you're going to eat. Different when it comes to sales tax. Michigan will assign you your filing frequency when you register with them. Again, this registration is something that your accountant could help you with. It is pretty straightforward, but sometimes there are things that are going to throw you for a loop. So I just want to reassure you that that's okay to not have all the answers and to need to ask some questions. Income tax is paid on the federal and state level, and it is going to look very different depending on what type of entity you have formed. The very basic level is that if you make money, you're going to pay tax. So if your goal is to make a profit, hopefully everyone's going to nod yes to that. Your goal is to make a profit. That means you're going to have to pay tax. But how much and how that calculation is done and what goes into it, there's a whole lot there. Income taxes, most of us who have been W-2 employees, we associate that with April 15th, we file a tax return, and hopefully we get some money back. We call that a tax return, a tax refund. The tax return is the actual form, which is another good thing to make note of when you're having conversations. The return is the form. The refund is money that you get back. Once you are a small business owner, you are hoping that those refund days are behind you. Because if you're getting a refund, that means you didn't make any money that year, or you paid in too much in estimates and the government held your money all year interest-free, and you don't want that either. Your accountant will set you up on a schedule where you are paying in quarterly if needed, or if maybe your business is a side business and you have a W-2 job, maybe you can have enough withholding on your W-2 that you don't have to make those quarterly estimates. It's a great thing for an accountant to do the calculations and help you through. This item, expenses to be written off, huge question. The very simple understanding of this is when you have a business, you take in money. What you take in is your gross. All of your related business expenses, whether it's cost of goods sold, fuel on a business vehicle, your insurance premiums, anything that helps you run your business, those expenses get deducted from your gross. What you're left with at the bottom is your profit. Your profit is what you pay taxes on. Okay, that's the very, very simple version. You take money in, you pay out what you need to operate, and what you're left with is your profit. You want to have a system, whether it's QuickBooks or something else, where you keep really good track of all of that. Because if you're missing expenses, that's increasing your profit, so you're going to pay more taxes. We almost at the end?
I think we're doing okay on, there's only one. Go ahead.
Okay. Cash flow management. This is somewhat of what I was just talking about. The profit is what's left after all of that is done. You have to be able to manage your cash flow in order to keep track, stay on top of your expenses throughout the year. If you're paying your insurance premium, and I just keep picking on that, that's a great one since we're all here together. If you're paying your insurance premium once or twice a year, you have to make sure that you have the money being set aside throughout the year, or you're going to get that income, or the premium bill, and you're going to say, I don't have the money this month. Well, what happened to the 6 months prior where you should have been earmarking that money so you had it now? That is a big component of running a business, is understanding your numbers. And what I frequently will explain to people is that when it comes to the accounting and bookkeeping piece of your business, there are 2 reasons that you really need to do this. One is compliance. Okay, the government says you have to pay sales tax, you have to file an income tax return, you have to do this to be compliant. But the other side is management. You can't effectively run your business. You can't grow your business. You can't meet your goals and go to the next level if you don't know your numbers. If you don't even know if you're making money, then you don't know if you've got a leaky faucet in your business. Build a 3 to 6 month reserve of operating costs. Great plan. As a business, you can have a savings account. You can put money in that savings account. It's coming out of your profit. Okay, if you're not making a profit, you don't have any money to set aside. But you certainly can structure your business so that you have money saved for things like a big bill coming down the road, or a time where business has been kind of slow. Wave, we were talking about that a little while ago, is a free software that's out there. There's another one that I'm drawing a blank on the name of. We were talking about it. I don't remember what it's called. Xero, yes. I think Xero is paid, but maybe less expensive. QuickBooks is really the gold standard. Our firm, UHY, we don't support anything other than QuickBooks or some of the bigger corporate softwares. But QuickBooks has all the things that any small business would need, and it has different levels that you can pick the right one for what you need. Forecasting upcoming expenses really goes hand in hand with what we said with knowing what's coming down the road, so you have money set aside for it. A business can be profitable and still run out of cash. Watch the flow. This is very, very important. If you've got notes, highlight that on there, because you can be making money, but if you are taking that money and maybe buying big equipment and paying down on a loan, the way those calculations are done, that's not going to affect your bottom line right off the bat, but you're going to run out of money really fast. Same thing if you're taking a lot of money out. Okay, if you are a single member LLC or a sole proprietor and you're taking that money out as draws, that's not affecting your profit, but you're not going to have any cash in the bank. The profit and loss, this we actually already talked about. We just didn't name it profit and loss. Profit and loss is the financial statement that says gross income, expenses, and your bottom line. If it's in the positive, it's a profit. If it's in the negative, it's a loss. So this is essentially the calculation to get there. Your revenue, the money coming in, cost of goods sold, your gross profit, then brings you down to taking out your other operating expenses, and your net income, net profit is what's down at the bottom. Okay, thank you.
So Chrissy assigned me a few slides, so bear with me. We're really talking about some of the operation setup and the decisions. One is, what type of physical location are you looking at? What are you thinking about? So we've talked a little bit about, is it zoned for the right business that you're doing? Most of you guys know I own an event venue. I had to go through the city to get a special use permit. I had to go to a planning commissioner and meet with them, tell them what my plan was. I had to pay an architect to actually draw out my entire site plan, including things that were already there. So it's a process. I had a very patient seller, so they let me go through the process before I completed the purchase of the property, because I wanted to make sure I could build a viable business there. So that is one thing that is highly critical. I know we all see something in an area that we think we want to start our business in, and we fall in love with the windows. We fall in love with the exposed brick walls. We fall in love with that it can bring our vision to life. The reality is that some of those cosmetic things can be added if they need to be added. You really need to know if, one, you could actually operate that business, where you want to operate it, and also, is it what you need? So not everybody understands or can visualize space, but let me throw this out there. Like, how many square feet do you think this room is?
900 square feet. 400.
I'm guessing around 450. So I'll get clients that come in and say, I fell in love with this space, da 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 da. And I'm like, oh, okay, well, how much square footage do you need? Well, I don't know really what I need. I mean, I need a kitchen area. I need an area to serve. And I'm like, where's your cleaning supplies going to go? Where are you thinking about some of these other elements? And also, when you purchase or when you rent, you're buying on square footage. So like in St. Joe, downtown St. Joe, averaging $10 per square foot. Like, so that is part of your real estate investment that you need to really, really, really think about. And you need to think about that customer experience. So when somebody walks into, if the customer's walking into the space, how does that flow? How does that look? Do you have enough room? Or if it's for manufacturing, do you have enough space to get all the requirements? Does it follow, like if it's a commercial kitchen, what the commercial kitchen rules are? So there is so much packed into physical location that it's not just about, I fell in love with this aesthetically.
And read the lease agreement.
Yes, yes.
They can make you insure all kinds of things that you don't want to insure.
Yes. I had a very interesting lease agreement where they wanted me to pay them a certain amount a month, but then they also wanted to shore up at the end of the year if any of their utilities were higher than they expected, if any of their property taxes were higher than they expected. So the lease was written completely in their favor. So, yeah, that
we did not sign that lease. So things get very interesting. So read the fine print, understand the fine print. Also recognize the location. So, a lot of people say, oh, I want to be, Main Street of St. Joe. And like, that's great, but you're going to pay premium for being at that location. You may have a starter plan that actually puts you somewhere else. It might be, okay, I can actually do downtown St. Joe and Main Street, but I'm going to do it in a smaller square footage, and really, again, understanding that. So that's super important. Mobile businesses, let's say you're doing a food truck, you're going to need permitting for that. There's, other requirements that are going to go on there. We didn't even get into insurance about food trucks, but we probably should at some point. Absolutely. Home-based business setup. Hey, you're a cottage food baker. You need to understand that you can't create a separate kitchen. That's the kitchen of your actual home. That's part of cottage food bakery guidelines. You're doing something e-com wise or whatever. Well, you can write off, a percentage for your office use, for those kind of things. So understanding how things are insured. My husband and I live where our business is. So we have an insurance policy that covers the business, and then we have separate that it covers our home. So just really sitting down and understanding those aspects and the decisions you're making. And always, always put on a piece of paper how you expect to use your space, because you will be shocked with what you forget or how quickly you run out of space. So my husband is building a property down in Dominican, and I'm like, that's lovely, dear. But again, where do the cleaning supplies go? Like, where's the closet for this? He's like, oh, didn't think about those little kind of operational elements. Also, look at proximity to your suppliers, your other complementary businesses. Please, please, please look at your competition. If you're the fifth bakery in town and every one of you are making cupcakes, probably not the best location for you. And so that's kind of really on the physical side. And then growth. So are you in a position where you're ready to grow your business? Think about the numbers first there. So are you ready to move from cottage food because you're making more than $25,000 a year in sales? So now maybe you aren't going to do your own commercial kitchen. Maybe you're going to rent out commercial kitchen space. That's going to be your next step. Understand where you are financially to be able to make that plan, and be ready for this. Like, don't be all of a sudden like, hey, by the way, I'm going to go add new real estate. And that's something you're probably going to put in a 3 to 5 year plan. You're going to be thinking through, okay, if I am reaching my growth goal of selling this much, then I'm going to be ready to move at this point. I'm going to need to start saving for potentially a down payment. I need to start thinking about, oh, guess what's next? Equipment planning, all those elements. So just really utilizing these hard costs as a way to plot out in your plan. So that's why it's so important when you're building out your business plan to think about all these levels of investment. Do you know that your oven is going to probably go out in the next 3 to 5 years? Well, that better be in your flow statement. Do you know that you want to add a second food truck? Well, that better be in your flow statement. Just really thinking about that. And then also thinking about maintenance and replacement scheduling. So I know we have a fire system. My fire system costs me almost $5,000 a year to maintain, because that is just the pure requirements of putting it back online, testing the alarms, taking it offline in the winter. That's an expense. That's a real expense. The other thing is also understanding when you're making these decisions, one, what are the different financial aspects that you can do? So how can you potentially finance it on a long term? I love a 0% loan. I love to, if Best Buy is going to give me a computer and I don't have to pay any interest on it and I can make monthly payments for 18 months. You better believe I'm signed up for that deal. If I could go get a lawnmower and I don't have to pay for 3 years interest and I can do monthly payments, sign me up for that deal. So always looking for those kind of options that you're investing, but it's giving you a payment plan. Or it might be something bigger where you're going to have to work with a bank and so forth. But there are other things out there. Also work with your accountant. Understand depreciation schedules. Understand how to plan for depreciation of your facilities, of your equipment. It doesn't hit the bottom line, but it certainly helps when you're doing your income tax returns because it's going to be more to write off on an annual business, which is going to offset your profit. So that's another essential thing to have a good depth of understanding. And I think now it's you, Chrissy.
Okay. All right. So some of you guys, this may not apply to because you, let me grab that thing. But managing your team, you aren't going to have a team because some of you are just solo. So those, though, that have a team or are going to have a team, some of the things that come into place, nowadays, things are probably like a lot different than they were back then, and how you have a company culture, for example. And so I think about culture being something very important within a job. And I know that you hear that word a lot, but it's truthfully, I think, really important with a lot of people out there looking for a job in general, whether it's with a large corporation or with a small business. Communication. I majored in this in college, and I believe in communication. I think all of us think communication is so important, but in a small business or a large business, figuring out how to communicate things to those employees that you have, making sure that they get that information out to them in a reasonable time frame. I mean, I like to communicate with all of you guys on Mondays, making sure that in 2 days you know that this class is going to happen. Well, in general, when, let's say it's a small business and, let's stop it. I'll go just a few minutes.
Yeah, go ahead.
Okay. Anyways, long story short, it's so important to make sure that you come up with a strategy of how you're going to communicate those specific things that you have. When you have deadlines and you only have a few employees, get those deadline communications out. All of it is very important. How many have done performance management on any employees that they have currently? Do any of you guys have employees? I should ask that. How many of you guys have employees currently?
I throw my husband and sons in.
Yeah, that's it. Okay.
I was gonna say there's the family voluntold that I got. So.
Right. Well, then I'm not going to go over a lot of this because you guys aren't really working with employees in general at this point in time. But I mean, again, performance management is really important if you have employees to make sure that they are following those guidelines you have in place.
That's a really good topic and something that should be looked at too. Like the marriage between working with your loved ones and your family.
Yes.
And, because those lines can kind of get blurred. If we live, work, and play together, like you do all the things and everything together, like compartmentalizing all that it can be hard. Like I worked on our food truck for Blossom Time, and my husband was a task manager, and I did not like that. And I had a whole attitude with him, and I wasn't used to it. This was my first time out here. I had a whole attitude with him afterwards, and I'm just sitting up here like, oh, okay.
Maybe that's the other question. How many of you work in your small business with family members?
Yeah, I guess that's
with my husband and it works out.
Yeah.
Tracy, get your hand up. I know you do.
Yeah. So that's true. All right. Well, I'm going to leave off the employee motivation thing then, because right now when it comes to that. Okay. So I guess then, oh, yeah.
I just want to reinforce this.
Yeah.
Even though that first part might not seem important now,
my business is working with you when you get to the growth phase, come holler at me. Because what you do now sets the basis for what's going to come in. How you manage your family is going to bleed into when you're now managing a team of non-family employees.
True. Yeah.
So if your intention
This is
is to
true.
grow your employees, setting the framework in your mind now is, in my opinion, incredibly important. Otherwise, you really will need me
down the road to undo the messiness that you've created. So if I could give you one piece from my experience that could save you tens of thousands down the road, maybe more, is thinking about this now, paying attention to this now matters, so that you're set up for when you get there.
Yeah.
Does that make sense?
Oh, it makes perfect sense. And do any of you guys have other like full-time jobs or part-time jobs in general? Where you're a manager at some, or if you have been a manager at some time. I mean, reality is that practice that you do in that can also help when it comes to when you're looking at building a team. And then this is the only other slide we have for this hiring. When you get to the point, let's say, and you want to expand your business, whatever that may be, looking into specific things, because if you're as a small business, you're your own HR department in some aspects. So when you're going to, and I've done so many job descriptions for jobs when I had teams underneath me, and making sure that those job descriptions are really very focused in and descriptive of what that particular job is, because I don't know how many times I've had those underneath me say, oh, but I didn't realize that that's exactly what I was going to be doing. And then I learned the hard way of, oh yeah, you have to put that on there, and making sure they know. Interviewing, I mean, again, these are basic things that you've had before when you've been in a job, but making sure that you're thinking about those specific things from a small business aspect that you're going to need them to do for you, and having that in the interview. Onboarding. I could say this word 1,000 times because I've been in jobs where onboarding, and not this job, but in other jobs where onboarding was horrible because they didn't have it organized, they didn't have it put together. And when you're a small business and you're putting on all those hats, taking the time to actually get a process together to plan out what you're going to do for an onboarding is probably not the first thing on your list. But reality, they are going to probably do a large percentage of those tasks that you need done in the business. And so you're going to want to make sure that you have it all ready to go and all organized so that you can talk that out with them. So I think this piece right here is so very important. And again, I'm not going to go into a lot of the employee retention right now, because again, this is when you do hire employees, but we already know the world has changed with how long people stay at businesses. We know that people like to look at different careers within the first 6 months of sometimes being at a job. It's amazing how short they stay. But in a small business, if it's possible, with the way things change, to keep employees on, is start thinking, what kind of incentives, what kind of ways can I grow my employees? I think short-term certification opportunities and things that you can upskill your employees is huge, and it can be done with small businesses too. It can be done with nonprofits. All of ways you can help grow your employee is huge to have that on. So anyways, and then work-life balance. Yes, it's going to be different in a large corporation than it's going to be in a small business. Obviously, in a small business retail, you're going to have to work weekends. So when those employees that you're going to hire on and you're putting that job description together, put that in there that, hey, this job is expecting you to work weekends, so that you're going to get the candidates that are out there that are going to come in for jobs that want to work weekends, because some people actually would prefer to do that. So, if you have more questions on that team piece, I'm happy to talk to you guys. I've worked with multiple teams in previous jobs, and it is important, and from a small business aspect too, because hopefully some of y'all will have some business that'll continue to expand and grow and be able to have those additional employees hired on.
Thanks for joining us. We'll see you next time for more strategies to empower your business success.